Hello traders, Gary Wagner here, just before 11 o'clock in Honolulu, 5 o'clock in New York. It is Thursday, August the 4th, 2016, and we are looking at a mixed bag in U.S. equities today with the Dow Jones Industrial Average in essence closing unchanged, showing a red tick down about 3 points, which is unchanged in terms of the Dow at 18,352. S&P showing a small gain on the day, up about 3.25 points at 2160, and the Nasdaq continues to track higher, up almost 0.4% at 4746. Let's take a look at our first chart. We are looking at the Dow Jones Industrial Average. This, of course, is a standard candlestick daily chart. Yesterday, we talked about the fact that as we plot various levels, and the one big level that we're plotting in terms of a basic fib retracement is from 17,055. It's this low right here, up to the most recent and new record highs at 18,626. When we do that, we absolutely can see that we had a rounded top. We definitely had resistance come into this area. Of course, this is a new record high, and the fact that it didn't take it out this quickly doesn't surprise me at all. The real question is not so much whether or not we'll go to new highs, because at some point I believe we will. It's at what point can we say that this current sell-off has actually concluded. Now, we have quiet activity, and that, of course, is due to the fact that we have a jobs report coming out, but we've identified this 23% retracement level at 18,257. We saw that as our low today, we saw that as our low 2 days ago. Yesterday, of course, was really an inside trading day with a higher low, but a lower high. Was a green candle, closed modestly higher. It's the first green candle we've seen in about a week. Today we had that doji again, that consolidation, which tells us the market is unchanged, which really tells us that traders are still deciding and without a solid, real sense of where the market will go from here, at least in terms of how they are betting. Now, we are expecting a modest jobs report tomorrow to show, we're expecting a jobs report that shows a modest increase in terms of the economy itself. It's a slow growth, but it is a slow and steady growth. So we could see some sort of a bounce in the marketplace, but let's wait for the jobs report to make that determination. Now, as I spoke about, the Bank of England, of course, came out with a stimulus package that was announced today. We saw that really affect the U.S. dollar by showing some strength. When we look at it here, this is our weekly chart, and you can see that we are green for the week. Euro dollar, in fact, has gone red. Now, when we look at this just in terms of a straight daily chart, let's go ahead and convert that so you get a better idea. You can see that over the last couple of days that we have absolutely seen the dollar find some tentative support right at around 95 on the dollar index. That's right here, of course. If we carry this back, you'll see that in terms of a logical technical basis, you do have this top here, you have this bottom here, and so we could see the dollar gain some strength right now, continue to move up. If that's the case, our next real level that we want to look at doesn't really come in till about 96.30. Also, pretty interesting day when we take a look at crude oil. Over the last couple of days, we've seen quite a remarkable rebound. Oil up almost 2.5%, 95-cent gain per barrel to close at 41.78. That's our current print on our daily chart. Now, we, of course, went on record looking for the market to genuinely move to an area anywhere between, call it 42, which is right in this area. It was based upon the 61% retracement, 41.93 more exact, to about 44. The market absolutely drifted below there, and at that point, we revised our basic forecast in saying that the market could go really as low as about this 50% retracement that comes in at 38.93. When you follow it through, you'll see that's precisely where we found support over the last couple of days. I expect that we could see some resistance either in this area, of course, or if it continues to move up. I really don't think it's going to really move past 44. I'm still looking overall at this market to either trade sideways to lower. The real band to watch to see if it could break through it, of course, would be this band between 42 and 44. However, I would look, as I said, for sideways to lower pricing, but we did hit our target. We hit our updated forecast after that, and now we'll have to see exactly where oil wants to go. But as I said, sideways to lower is my call. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.